Joining me now is Dr. Vera Songwe, the Undersecretary General of the United Nations and the Executive Secretary of the Economic Commission for Africa. Hi, Vera. It's so wonderful to see you. And I want to start by talking about a concept known as the Liquidity and Sustainability Facility that you have been the architect for. What exactly is it?
Listen, first of all, thank you very much, Zain, for having me today at the Qatar Economic Forum. It's a pleasure to be here. Talking about the Liquidity and Sustainability Facility is the most important thing we could be talking about here today, because it is about recovery. It's about how emerging markets, frontier economies get out of this crisis. It really means when frontier markets and emerging markets sovereigns go to the market to issue bonds, we have two components to those bonds. We have a debt premium component, which is about how you assess their macro stability, how you assess their country risk. And you have another one, which is called the liquidity premium, which is essentially about, once I buy that bond, can I retrade it? Can I make the bond liquid immediately, hence liquidity facility? And for most emerging and frontier market economies, you can make the bond liquid immediately, which means that bondholders have to hold this bond in a manner that is illiquid. What does it mean illiquidity? It means they can't convert it to cash and do something else with it. As we all know, if you're not using your resources that you have, then somebody must pay for that. So what is happening is emerging and frontier market economies are paying for this liquidity premium, which is the person who is holding their bond. The bondholders cannot make that bond liquid immediately, the next morning, the next minute. In the United States, this market for making bonds liquid, when you buy a US Treasury bill, within the hour, you can make it liquid by going to the repo market. The repo market in the United States is over a $20 trillion market. In Europe, it's about a $7 trillion market. We don't have this for frontier economies, and hence the increased cost of their debt. What we're looking to do is reduce the cost of frontier and emerging market debt so that they can use these resources themselves, the emerging markets, to do more growth, more development, and more important things. So that's really what the Liquidity and Sustainability Facility is.
And you've taken your concept to the IMF, to the ECB, to various central bank governors, to very many heads of state, personally talking to them about what you're trying to do and explaining exactly how it's going to work. Could you break it down for us in practical terms? How do you get this enforced?
In practical terms, what we need today are three things. The first one is, for the first time in 10 years, we have the issuance of what we call the special drawing rights, which is additional resources that are being put into the International Monetary Fund. What we are looking to do is use some of those to fund the launching of the Liquidity and Sustainability Facility. Remember, what we're trying to fix here is correct the market distortion. We're not asking for any special treatment for frontier and emerging market economies. We're actually trying to perfect the market. We're trying to do what we've always said we should keep doing. How do you make it work in practice? You have the funding. If we can get the funding from the SDRs, then essentially what you do is, when emerging and frontier market economies decide to issue bonds or raise debt, they come through this facility. Anybody who uses this facility then knows that they can immediately make their bond liquid the next morning. So they take away the cost of asking or charging the sovereigns for holding the bond for much longer. Now, the second thing we're doing, which is why we're calling it a sustainability facility, is also we're saying we can reduce the cost of the bond or give an additional premium if you're going to invest the resources in sustainability or green growth, renewable energy, better infrastructure. And so practically what you do is, all we're looking for is create a funding mechanism that just allows us to reduce the cost of this liquidity by creating a repo market that allows bondholders to be able to repo their bonds, which is essentially resell them.
And where exactly are you in this whole process? What do you need to make this a reality?
We need the funding. That's I think in terms of what we've done over the last year is socialize the idea with many of the heads of state, central bank governors, ministers of finance, the World Bank, the IMF. And I think we now have a clear understanding by most that this is a market distortion that is making debt more expensive for emerging markets. Now what we need is somebody to fund the initial idea. We're looking, eventually we're looking for about $30 billion, but we could actually start the facility with about $5 billion. So what do we need today is funding, not an investment, but just funding. So it's collateral, initial collateral of about $5 billion to start the mechanism rolling.
Vera, if I could just pull out for a moment and just look at the big picture of the continent of Africa and the economic situation post-pandemic. When we look at going forward post-pandemic, what is it that you see? What does Africa need post-crisis? Because we're still in emergency and response mode.
And that's a very, very good question. I mean, the first thing Africa needs is some liquidity, hence the liquidity facility, some sustainability, which means looking at how you grow out of this crisis in a sustainable way, in a green way, creating more green jobs, creating more jobs that are responding to the needs of the African Continental Free Trade Area Agreement in particular. But what all that summarizes into two things. The first thing Africa needs to do is create more jobs. How do we create more jobs? Is diversify our economies. Diversification is going to be particularly important. We have seen the whole sort of digital economy, explode during this crisis. But the digital economy, when we talk about it, seems like something discrete. It's a long continuum of renewable energy batteries, of a better applications on your laptop, of medical technology, of biotechnology that's working well, of cybersecurity. I think we need our economies, particularly African economies that have been mostly commodity-driven economies, to begin to see how, one, we add more value, first of all, but secondly, how we diversify our economies. The economies that have done well during this crisis are economies that had access to liquidity, that had a green growth agenda, and finally, that we're doing something that was embracing the fourth industrial revolution, just diversify your economy and move towards better technology-enabled systems.
Dr. Vera Songwe, the Undersecretary General of the United Nations and Executive Secretary of the Economic Commission for Africa. Thank you so much for joining us, Vera.
Thank you, Zain. Thanks for having me.